Welcome back to your daily market wrap. It is Monday, April 13th, 2026, and the ASX 200 has just closed its first session of the week. Today's session was characterized by a mix of local data anxiety and significant global geopolitical developments. The S&P ASX 200 index finished the day at 8,926 points, marking a decline of 34.6 points, or about 0.39%. While it's a step back, it comes after a period of significant strength for the local bourse. Looking at the bigger picture, the broader context remains optimistic. Over the last 5 trading days, the index has actually gained over 4%, showing a strong recovery trend prior to today's slight retreat. We are currently sitting just 3.01% shy of our 52-week high. This puts us in a critical technical position as market participants weigh whether we have the legs to break into new territory or if a consolidation phase is coming. The primary weight on today's sentiment stems from escalating tensions abroad. Washington is preparing a blockade on Iranian port traffic, a move that has significant implications for global trade and regional stability. This drastic measure follows the failure of recent talks between the United States and Iran. Without a diplomatic agreement to end the Middle East conflict, markets are pricing in increased geopolitical risk and potential supply chain disruptions. Investors are naturally wary of how these developments might impact global oil prices and shipping lanes. This has led to a broader risk-off approach today, with capital flowing towards safe haven assets and away from higher-risk equities. Domestically, all eyes are on the upcoming March labor market data. Caution is the keyword here, especially following the surprising results we saw in February, which have kept the Reserve Bank on its toes. February's jobless rate unexpectedly rose to a 3-month high. This has raised concerns about the resilience of the local economy and whether high interest rates are finally starting to have a cooling effect on the employment sector. Let's dive into the technicals. Despite today's retreat, the structural integrity of the ASX 200 chart remains interesting. There are specific levels that every trader needs to have on their radar right now. The index continues to hold firmly above a key support zone near 8,183 points. This level has acted as a reliable floor during previous market pullbacks and remains the line in the sand for bullish participants. On the flip side, the near-term resistance is located around 8,940. This level has proven difficult to overcome, and a decisive break above it would be a major signal that the bulls have regained full control of the trend. Looking at the Relative Strength Index, or RSI, we're currently sitting at approximately 60.14. This is a healthy reading. It suggests we still have bullish momentum behind us without being in overbought territory just yet. For now, we are trading within this range of 8,183 to 8,940. How we break out of this consolidation box will define the trend for the remainder of April and potentially set the stage for our next attempt at record highs. Sector performance during the session was notably bearish, with 8 of the 11 major sectors closing lower. This broad-based decline highlights the defensive stance many institutional investors are taking today. Information technology emerged as the weakest performing sector, correcting by 1.8%. This follows global trends where tech stocks are being sold off amid rising bond yields and geopolitical uncertainty. Consumer discretionary also struggled, falling 1.08%. As cost of living pressures persist and labor data remains uncertain, investors are cautious about the outlook for household spending and retail profitability. Industrials were not far behind, correcting by 1.04%. The sector is particularly sensitive to the geopolitical tensions in the Middle East and their potential impact on global logistics and shipping costs. On the upside, energy was the best performing sector, gaining 2.2%. This sector is rebounding from a recent decline, driven by the possibility of supply disruptions stemming from the proposed blockade on Iranian port traffic. While today was a win for energy stocks, the sector is still off about 1.75% for the past 5 days. Today's gain reflects a geopolitical premium being added back into oil and gas prices as the conflict intensifies. Among individual stocks, we saw some impressive outlier performances. Despite the broader market gloom, a few companies managed to deliver substantial gains for their shareholders today. Telix Pharmaceuticals was the standout performer, rising a massive 7.71%. the market responded very positively to recent developments, making it one of the most talked about stocks of the session. Karoon Energy also recorded a strong day, gaining over 5%. As an energy play, it benefited directly from the bullish sentiment surrounding global oil price expectations and the Middle East situation. Conversely, it was a difficult day for some high-profile names. We saw significant selling pressure in sectors that had previously been investor favorites, leading to some sharp double-digit corrections. The A2 Milk Company recorded the largest decline of the day, falling nearly 13%. This sharp correction caught many by surprise and suggests a shift in institutional sentiment toward the dairy exporter. IDP Education also faced headwinds, dropping 9%. The education services sector is under scrutiny as global student mobility and regulatory changes continue to impact future growth projections. Looking ahead, the market's focus is shifting toward international data. We are entering a week where U.S. economic indicators will play a massive role in determining global risk appetite. Market participants are focusing on U.S. existing home sales data for March. This will provide further insight into the strength of the U.S. housing market, which remains a key pillar of their overall economic health. A strong housing result would suggest that the U.S. consumer remains resilient despite high rates, while a miss could lead to concerns about a broader slowdown, impacting ASX sentiment by association. Domestically, we're watching the National Australia Bank's Business Confidence Index. This rates the current level of business conditions in Australia and is a crucial forward-looking indicator for our local market. Changes in business sentiment can be an early signal of future economic activity, such as spending, hiring, and investment. A positive reading could provide the ASX 200 with the domestic support it needs to recover. In summary, while today was a red day, the technical foundation of the ASX remains intact. We are caught between positive technical momentum and significant geopolitical headwinds that require a cautious approach. As always, trade responsibly and manage your risk carefully. Markets are volatile, and having a clear plan for both support and resistance levels is the best way to navigate these uncertain times. If you found this ASX market wrap useful, please hit the like button and subscribe to the channel for more regular updates. Your support helps us keep these insights coming to you every day. Thank you for watching. Let us know in the comments which stocks you're tracking this week. Stay disciplined, trade smart, and we'll see you in the next market update. Goodbye for now.
Disclaimer: the information contained in this publication is general in nature and has been prepared without taking into account your objectives, financial situation, or needs. It is provided by Titan Securities, holder of Australian Financial Services, license number 307040. It is not intended to constitute personal financial advice. Investing and trading involve risk, and past performance is not a reliable indicator of future performance. You should consider your own objectives, financial situation, and needs before acting on any information contained herein. You should also read our financial services guide and, where relevant, the product disclosure statement and target market determination issued by the product provider. These documents are available upon request. Titan Securities accepts no liability for any loss or damage arising from reliance on this information.